Hey guys, welcome to part 2 of what I started early on in the week, where I'm showing you different ways of how you can improve your trading strategy, improve your trading system, and overall improve your trading approach, trading analysis, which will improve your profitability and your success in the long term. If you use these nuggets well, they've improved my own strategy, they're proven and tested, and it's going to help you improve yours as well. Cool? So, what was I talked. If you've not watched part 1 as well, make sure to go watch part 1 before you watch part 2, because this is a build-up of what I'd already started, okay? So step number 6, when you analyze the market, make sure you analyze general markets and pick out your best trades, okay? Trade your best setups. At the end of the day, make sure you trade your best setup. So when the week is starting, for example, I have 3 pairs, okay? And all these 3 pairs of mine, for example, are showing me a trade possibility that is coming up, okay? So I have USD card, okay, giving me a possibility of a short trade up here, okay? I have USD card. The next thing I have Aussie dollar, giving me an entry point at this lower level, and the last one that I have is gold. Okay, so I'm not greedy. I'm not trying to trade everything at the same time. I want to take proper risk management and proper risk approach. Okay, today's Wednesday, and Wednesday and Thursday are normally my most volatile days where I get my most entry points. Okay, so now you have to be patient, analyze the markets, have that in scenario, look at all possibilities, all probables, and have a wonderful or a better analysis on the one you want to execute. So when market gets to my entry point, I'll weigh the options. Which one was the best pick? You don't have to trade everything, okay? If you come to Euro USD has a similar flag pattern. Okay, you can see how we've had successful flag patterns here. This was an entry point, market shot up, entry point, shot up, entry point, shot up. Another possible entry point here, market could possibly shoot up, okay? So I don't come and trade everything, okay? I look at the most probable outcome, the one that is aligned, the one that's ticking all my boxes, and I trade that trade. So when you're trading, that's under point number 6. Do not trade anything. Pick out your best picks for the week and focus on trading those ones. Executing it right, trading it right. You can't be everywhere at the same time. And do not try and spread your wings and say, let me just try everywhere, so that if anyone goes wrong, one can be a winner. You could possibly get all of them wrong. And trust you me, your psychology won't sit well with you. So work on working on very few. Analyze a lot, but trade very few at any given time. So that's point number 6. Point 7. Always make sure to calculate your risk before entry point is attained. So following up on point number 6, okay, number 7 builds up on that. So for example, as I'm waiting for markets to come to my entry level, I'm patient enough to wait for it to attain my entry level, okay? Now what am I doing in the background? I'm calculating my position size. I'm calculating my risk that I want to risk in the market. I'm mentally rehearsing how I'm going to trade manage this trade anytime, okay? Make sure you do that anytime market is approaching. Do not wait, because I normally see a lot of people, okay? They wait for entry to be attained, okay? Market reaches their entry point, then they start calculating their position size, how much they're going to risk. And trust you me, you might make a lot of mistakes because you're in a rush. You already know where your stop loss is. You can calculate your risk before even market gets to that point, okay? So that's what I always do. I prepare in advance. Before market reaches my entry point, I start calculating my risk. I start mentally rehearsing how I'm going to be in that trade. Because if you don't mentally rehearse, and this is something I used to do a long time, market just reaches, I start entering. Market starts going against me a little bit, I start coming out, I start panicking, I start being fearful, doubtful of my system. These days, I mentally rehearse, okay, if market gets to that level, if it breaks above this level, I won't tamper with it. I know why my stop loss is at a certain level. I know why my TP is at a certain level. I have tried, I have tested, I have back tested, I have data, proven strategies that will help me be successful in the long term. If you're also someone for self-affirmation, believe in yourself, okay? Talk to yourself, give yourself time and your system time for that trade idea to pan out. Believe in yourself, okay? So that's what I do before a trade entry comes. I start calculating my risk and I mentally rehearse how I'm going to manage that trade. Cool? So try and do that and you'll see how it's greatly going to improve your trading outcome at the end of the day. Point number 8. Stop placing tight stop losses. Okay, and stop placing stop losses at liquidity points. I see a lot of traders making this mistake, and I used to do it myself, okay? Not long ago, even recently, I found myself, I've taken a trade, then when I'm reanalyzing the trade, I'm fine. I've put my stop loss at a very bad point, and you know, you can't move your stop loss, okay? You can't change it. Once you've put it and you've put a certain position size, if you put it much bigger and move your stop loss, you're going to lose much more than you had calculated. So for example, if you had entered this trade, for example, let's say here, and it's already a losing trade, but let's just look for it as an example. Or let's say maybe you had entered here, so let's remove this. Let's say you had entered somewhere here. You had gotten that rejection, very good entry, okay? And market is starting to move towards your direction. Now, trust me, I wouldn't, if I was to take this trade, I wouldn't put my stop loss anywhere inside this zone, okay? Why? Because if you move to the left, you can see, and this is something I normally tell my students, look left, structure leaves clues. Look left, structure leaves clues, okay? So this clue here shows us that this is a strong liquidity zone, okay? Many sellers were here, and at this zone, even if you entered, many stop losses will be spiked out here even if market was to go to target. So what will you do? Put it at a higher level, okay? Now for me, I'd rather even sometimes wait for that liquidity level that I'm looking for, be tapped, then I take my entry. So for example, for me, I'd rather get an entry at that point. And that's why I said in my earlier video, if you watch part 1, that's why I'm waiting to short the market at that higher level up there, because now if I put my liquidity or my stop loss, it's nowhere within a heavy liquidity zone that I'm watching, okay? Market is in limbo, okay? So that's what I normally do. I never put market stop losses at liquidity zones. Number 2, I never put my stop losses too tight. So if you enter this trade, I normally see a lot of people doing this, okay, because they want to have greater risk rewards, greater trade outcome. So they come and put their stop losses very tight. I've never understood how you can have a 5 pip stop loss, okay? Because this one you can see the risk reward ratio is 1:12, okay? Meaning if you risk 1%, you're going to make a good 12% out of that trade. If you risk 2%, you're going to make 24%. And hell, if you risk 3%, you're going to make 36% return with that one trade, okay? Now, trust me, my guys, the markets are not perfect. Never have a tight stop loss, because you never know what will happen in the market. Give the market time to breathe. Give the market time to move up and down. Why lose 2%, 1%, or even 3% because you're having a tight stop loss, okay? Have a big stop loss, okay, and let the markets move. Let the markets breathe. They can come towards this zone, get liquidity somewhere here, then move towards your target without having touched your stop loss. So you ended up not losing in a trade where you could have lost if you had a tight stop loss. So you're very right on direction, but you had a tight stop loss, rendering you totally wrong on the trade, okay? So avoid having tight stop losses. Leave the market time to breathe. Another thing on top of that point, never assume that your stop loss cannot be attained no matter how big it is. I'll find some people now doing like that, saying this is a good big stop loss. I don't expect markets to reach that, okay? Because I went through that. I used to have very tight stop loss. Then I saw that one was being hit a lot. And then I came in, adjusted, and had a very big stop loss. Then I ended up finding that those ones, they take time, but market eventually reaches. So at the end of the day, never assume that there's no stop loss that is too big that cannot be hit, okay? Any stop loss, no matter, even if you put above liquidity, have that mindset that anything can happen. And when you have that mindset, you'll have a proper risk management approach, okay? So that's a very important point that really helped me improve my trading approach. Cool? Step number 9, you do not have to trade all the time. Now, I normally see traders looking to trade every day. They're looking for Monday to Friday, every single day. If they don't have a trade, then they're doing the wrong thing. For example, the whole of last week, and even this week, it's now been 1 week and a half, I haven't had any trade. My trades have really been setting up, and I've been really patient to wait for those levels to be attained. And that's what I'm waiting for. I'm never rushing the markets. I'm not fighting the markets, okay? I'm very patient for those entry points, market to come. If it doesn't come, I do not trade. So I have a certain trading system, a certain approach, okay? So you have to have that laid out. You cannot avoid trading and you don't have a plan. Now, my plan is telling me when you see this and this adding up and the boxes are being ticked, take the trade. If nothing like that is happening, avoid the markets at all. I end up doing other stuff. I don't focus that this market has to give me a trade every day. The markets are not your daily job. Okay, if you go to work, at the end of the day you expect a certain pay, or at the end of the week, or at the end of the month, depending on how your work system is. Trading is not the same. Trading needs you to be very patient and wait for the entry point to be attained. And you can be very patient and stop loss can still be hit, but that doesn't render that you're wrong. Just be patient for the right setups to come in accordance to your trading plan. So that's very important. I see a lot of traders, especially scalpers or new traders, looking to trade every day. They're not patient, they can't wait, they want action. If you want action in these markets, Warren Buffett says, if the market is the most expensive place to figure out who you are and how the markets work, okay? So don't play that game of trying to figure out how the markets work by trading all the time. Avoid that at all costs. Be very patient, wait for certain entries to be attained, and also once you take the trade, be patient enough for entry to be hit, stop loss to be hit, NTP to be hit. Don't rush, okay? And that leads me to my last point, which is one of the most important points that will help you any day, anytime in your trading career. Trust in your analysis, trust in yourself, and be patient for that entry point to be hit, target to be hit, even stop loss to be hit. Be very patient and trust in your system and trust in yourself. If you don't trust in yourself, who do you expect to trade your system successfully? Your system is uniquely yours, okay? It's tailor-made for you. That's one advantage of the trading the Forex markets. It's like having a tailored suit. No one else can fit in your suit. So if you don't wear that suit, who else is going to wear it? Now, same thing with your trading. Trust in yourself. Trust in your system, especially if you've back-tested your system and it's a positive expectancy system or a profitable expectancy system. Trust in it at the end of the day. If you don't trust in it, trust you me, you're going to have too much analysis paralysis. You'll be all over the place. You'll be so psychologically drained, okay? Because you'll be doing a lot of things. So for me, I trust my system any day. Even when I have 10 losses in a row, I'll be patient. I'll trust in my system because I've tested it, I've back tested, and I trust in myself because I am the executor of my trade, okay? No one else is going to execute my system. It is only me. I can trade it to perfection. Even if I get a loss, it is me who has accepted that loss and it's me who's traded. The next time I get such a similar scenario of a trade, I'm going to execute that trade. Trust you me, okay? So at the end of the day, even before your trading becomes very successful, even if you're having losses, continue trusting in yourself, continue trusting in your ability that you're going to be a great trader, okay? So that's part 2 of what I wanted to start sharing, and I hope you've enjoyed that one. I teach most of everything that I've taught in class. There's some things I've not even talked about. I've not talked about having a good team around you, having a good environment of where you need to trade in order to improve your trading performance, having a community of traders. There's much more that encompasses the success of a trader, okay? And the rest, I'll let you come here to class and I'm going to teach you and I'm going to mentor you to trade in a professional and profitable way in the long term. I never promise short returns, but in the long term, if you follow the strategies we use and follow them well, trust you me, you're going to see a lot of success in the market. So after all that is said and done, like I always say, remember to stay woke, stay financially literate. May the peeps be with you. I'll see you soon.